People think of Warren Buffett as one of the best investors of all time, and with good reason. His Berkshire Hathaway BRKD 0% and Berkshire Hathaway BRKB 0.05% companies nearly doubled the S&P 500's annual return over almost 60 years, making early investors very rich. In 2022, Buffett and Berkshire again did better than the market. Now that trading for the year is over, this chart shows that Berkshire Hathaway actually made money, easily beating the S&P 500. Buffett is known as a top stock picker and capital allocator, and Berkshire's outperformance was driven by both its stock holdings and its subsidiaries, which include the insurance company GEICO, the railroad BNSF, and dozens of smaller businesses. So what happened to Buffett's best stocks in 2022? You could be shocked. Here are the top 5 things that Berkshire owns. The top 5 stocks Berkshire owns come from 4 different industries: technology, financials, energy, and consumer staples. The performance of these 5 stocks was very different. Last year, a portfolio of all 5 of these stocks with equal weights would have gone down by less than 1%, which is still a lot better than the S&P 500. Let's look at how each of these stocks did and find out why Buffett likes them. Number 1. Apple. Berkshire first started buying Apple, AAPO 0.25% in 2016, and since then, the company has worked hard to increase the amount of Apple it owns. Apple stocks are now worth about $120 billion and make up more than 40% of Berkshire's stock portfolio. Buffett has said many times that the tech giant is probably the best business I know in the world. Apple did worse than the S&P 500 in 2022, but it did better than the Nasdaq Composite and its other FAANG stocks. In recent months, the stock has gone down because of a slowdown in production in China. However, people still want Apple's newest iPhones, and the company is still making a lot of money. Number 2. The Bank of America. Buffett's favorite bank for years was Wells Fargo, but after the fake account scandal, Berkshire sold all of its Wells Fargo shares. Now, Buffett's favorite bank is Bank of America, backed at 0.06%, and CEO Brian Moynihan is a big favorite of his. Buffett said that he was the most underrated banking executive in the country. He also gave Moynihan credit for running Bank of America, which is the No. 2 commercial bank in the country in terms of assets. Bank of America underperformed the S&P 500, which is a cyclical index, but it seems ready for volatility in 2023 because Moynihan has built a culture of responsible growth and only predicts a mild recession. Number 3. Chevron. This year, Buffett's best investments have been in the energy sector, where rising oil prices have made companies like Chevron, CVX 0.66%, make a lot of money. Berkshire bought a lot of shares in Chevron and Occidental Petroleum, which shows he is optimistic about the oil industry. He also seems to like and undervalue Chevron's management team. The price-to-earnings ratio for Chevron is 10 right now, and the stock has a dividend yield of 3.2%. Even though oil prices are lower than when they were at their highest, they are still high. If they stay high, which seems likely if the war in Ukraine continues, Chevron could have another great year in 2023. Number 4. Coca-Cola. Buffett has liked Coca-Cola Co. 0.53% for a long time, and in many ways, it is a classic Buffett stock. The company has a well-known global brand, and its distribution network and marketing power give it an edge over its competitors. It also has long-standing relationships with restaurants, retailers, and convenience stores. Buffett once said that if you gave him $100 billion to be Coca-Cola in the beverage market, he would give it back to you and say it couldn't be done. Coca-Cola did better than the market in 2022 because the company had good results and was a consumer defensive stock, which means that people buy its products no matter how the economy is doing. Number 5. American Express. The last stock Buffett likes is American Express, XB 0.29%. He has liked it for a long time. Buffett likes the better credit quality of the credit card company. He also likes the company's management team and the fact that it has a well-known brand that makes cardholders pay fees. American Express also makes money from credit card loans, but its biggest source of income is actually its own payments network, which it runs. Even though there were problems with the economy as a whole, MX's network volumes grew by 24% this year. This shows that payments are getting better after the pandemic. American Express has a price-to-earnings ratio of 15 right now, which is fair, and it pays a dividend yield of 1.4%. Should you take Buffett's advice? Even though Berkshire's top 5 holdings beat the market in 2022, 1 year isn't enough to judge a stock's performance. Buffett would probably agree, as he has said that his favorite holding period is forever, when the right conditions are met. Berkshire owns these stocks because Buffett thinks they have competitive advantages that will last for a long time. They are also different. All of them pay dividends and trade at fair prices. If you want to invest like Buffett, you can buy Berkshire stock to make things easier or use some of Buffett's ideas in your own portfolio in 2023.